Hi, I'm glad you joined us all today. And today we wanted to talk about today's market and compare it to markets in the past.
Yep.
So Sarah, why don't you give us a little outline of what's happened in the past?
Well, to start, we've obviously had a pretty rough year in the market. So we're down, somewhere in the neighborhood of, we've seen a bottom of around 25% in the S&P, a negative 25% year to date. It's been very frustrating to watch on a day-to-day basis, but it always helps me to look back at history. It's really, history doesn't it doesn't repeat, but it rhymes, right?
Rhymes.
So we get some clues as to what maybe might happen in the next year coming up. And when we look at this chart, for example, we'll share this on the website as well so you can analyze it more closely, but you see that the vast majority of the time the market ends in the positive, in the green, which is illustrated on the right hand side. It gives you a list of all of the years that the market has been up and up by ranges 0 to 6%, etc. And then we've had 20 negative years versus 65 positive years going back to 1937. And only 3 of the years in that history have been down over 24%. So that's notable because we're in
one of those again.
Exactly. So what happens in those years in the following year? I think that's the really interesting question, right?
Right.
And what we see is that the year following a market that's been down over 24%, we tend to see in every instance, 2008, 1974, and 1937, we had really robust returns the year following.
Right.
So it's a good time to be putting money in the market
Or staying fully invested. Yeah, so 1937, the next year the market was up 31%, and it'll show if you get the chart or look at the chart closer. And also in 1974, the market was up over 37%, and more importantly, the next year after that it was up 24%.
I read that the average, on average, you have a bull market lasting about 2.7 years after you've had
a bear market.
Right.
And then again in 2008, the market's up over 27%, and the year after that, it's up 15%.
Mm-hmm.
So being fully invested really works for the long run. In the short run, it just doesn't feel very good.
It does not feel good.
And what we want to do is look at our next slide, and this shows why you want to be totally invested. So why
because
don't you
if you pull your money out, I'm sure there are those select few who get just lucky, but no one, even Warren Buffett, can time the market. And what happens if you miss the top 10 days, your returns are going to be less than half of what they might have been if you had stayed fully invested throughout this painful period. So, and it goes on and on. If you miss if you're fully invested in this chart, this is a $10,000 investment, price only performance. If you stayed invested, about 61,000. It goes down to 28,000 if you miss those top 10 days. And then it cuts in almost in half again if you miss the top 20 days. It's about 16,000. So, and on and on and on. So, this to me is a very compelling case that you do not want to sit out because you just don't know where those top days might be.
Right. And one of the things that top investors do is they have their money in quality stocks and they add in monthly through periods like that.
Dollar cost investing,
which reduces your risk, but in the end you get more out of it. I was down in the Bahamas for one of the last conferences that John Templeton was actually at. And one of the things he said is that at Templeton Funds, they studied every timing mechanism. And on both picking the top of the markets and the bottom of the markets, no system consistently worked. And so the moral that he was telling us is you just got to be fully invested.
And it's tough to have faith, but you really have to have faith that the market's not going anywhere. It's going to come back. It has time and time again.
And it will in the future.
And I mean, the American stock market is the leader of investments in the world. I mean, we make up for over 60% of the world's investable
Equity
assets.
investments, that's correct. So anyway, we want to thank you for joining us and hope to see you again real soon.